This thing.
Okay.
There we go. Good to see everybody. Welcome back to your Frederick Real Estate Update. Thanks for tuning in. Make sure you go into our YouTube channel down there and like, subscribe, click the bell, share it. And we highly appreciate it, Terry and I. So it's doing good. All right. Beautiful day. You ready?
Yes, sir.
All right. Let's go.
3, 2, 1.
Hey, folks, welcome back to your Frederick Real Estate Update. I am Darren Ahern with over 23 years experience in the Maryland, PA, and all over regions. And I want to thank you guys so much for tuning in. And I also have with me the man, the myth, the legend from Presidential Bank, Mr.
Terry Kernan.
Hey, buddy. How we doing?
Good, man. How are you?
Happy middle September.
Can't believe that we're here.
We are. It comes fast,
rolling.
it goes fast. Summer's gone, fall is before us, leaves going to be changing, and there's a lot of good positive stuff in the air, and that is a very, very good thing. Thank you guys so much for tuning in. Go into WFMD in the drop-down menu. This is program number 428 that Terry and I have now done together. And the last couple programs, we were really hot and heavy on some of the wild, crazy stuff that happens in real estate transactions when it comes to falling in love with a TLC, tender loving care, fixer-upper kind of home you want to do sweat equity in, and how you navigate through that process, and what are some of the awesome lender things that Terry shared to pay attention to, that you definitely need his help as well. And we put both of us together in an awesome team. We can help you out. And I just finished one this last week I settled that was probably one of the more difficult, challenging ones that I've dealt with in my career. But man, we got her done, and my buyers are about as happy as they can be. So, but thank you guys for tuning in so much. And Terry, before we start, I just want to take just 2 seconds to send condolences and heartfelt to Charlie Kirk and his family and loved ones. Last couple weeks have been pretty horrific for our nation, as we all know. And for the young lady that was brutally murdered also on the train, and now 3 police officers in York and others, and it says everywhere. And so it's almost like you can't even, like, how many tragic, bad, unnecessary things that are happening, all that are not good for our nation. And so we just want to send out to anyone going through tough times, hardships, and different things. Our heart goes out to you, because, man, we want to see everybody happy and everybody peaceful and in harmony and all that good stuff. And Terry, that's what you and I have done for all these years, is to have peace and harmony and good results in real estate with mortgages and helping them buying and selling homes.
Absolutely.
And so that's what it's all about. That's, I think, what the American people, I think we're going to see a lot of changes coming up because of what's been happening. And I think it will be for the positive, prayerfully, for our country and community. So, all right. Thank you guys so much for tuning in. Numbers really quick, Terry, because we got so much to cover. This is our weekly dose of mortgage and real estate. Awesome stuff. So here we go. Numbers real quick. 658 homes for sale in the area. And that is up just a tiny bit. We were at like 644, I believe. And so we've gained a top couple homes, 66 coming soon. So that's down a little bit. Under contract, 441 homes are under contract, sold in the last 30 days. 292, the resale homes, 264, those with an average time of 29 days on the market. The overall time on the market we're still seeing has come down a tiny bit, Terry. We are at 40 days for the area. And so that's come down from the high. I think we got up to like 52, I believe, at one point. And so we are seeing everything move in a really good direction. Median price 460, average 516, and pretty steady in general. I just sent out a ton of information to a lot of potential sellers and people that have been requesting, Terry, about me giving updates on their home's value and trends and the whole 9 yards. And I've been spending a lot of time on that. And it's been really, really good, because everybody, the sellers are just sigh of relief, like, wow, thank God that prices are up just a hair or flat. Thank God we're not really down much at all. And I have had a couple that have been a little disappointed. I've gone a couple appointments, and I've had some sellers be extremely bewildered, not at me, but at the fact of going from fairy tale land to reality land, which says, yes, your home is not quite worth what it was a year ago in some areas. And so I tell them it's nothing to panic about. Think about it, guys. Your value's gone up more in the last 5 years than we've ever seen in the history of real estate. It's kind of like I keep saying and screaming, Terry, you're at the top of your values. There's no crash in our area. It's not really coming. And hopefully, prayerfully, volume, everything's going to get a little better. And we're going to talk about those numbers in that regard. But the sold to list price ratio that everybody likes is at 97.8. So that has come down a tiny bit. So we'll see what happens going forward. So there is the latest and greatest as far as the numbers and things like that. So let's dive into our huge topic today, the elephant in the room. It's as big as an elephant can be. The Fed met this week, Terry, and tell everybody what in the world happened.
Well, what happened was everything was expected to cut it 0.25%, and they did. Okay, so we had baked in, and I've used that term before. We as a market, we as a mortgage market, baked in that result probably 3 to 4 weeks ago.
Yep.
When we saw a softness in the jobs market. Okay, so there was no big, nothing surprised anybody. What I had pushed for, and there was one other governor that abstained from voting yesterday because he wanted a 0.5% cut.
Oh,
okay.
And
he may have quoted me, but I think that we should have done a 0.5% cut. And I truly believe that we got to get ahead of this. So next time they meet, I believe they're going to cut again, and that's at the end of October.
Yep.
Then they're going to meet in December, and they're going to cut again. That is my prediction. I don't think they're going to go crazy with a 0.5 point unless we see a huge softness in the jobs market, because that's kind of what they're focusing on. Inflation is going to take care of itself.
Yeah.
It's going to be in that 3% range or below. So we've got to really look at the jobs market. But basically what they did was they cut it 1/4, and they left it open that they're going to, for the ability to cut coming up in October and December.
Yeah, and that was the first time the Fed has cut rates I saw in 9 months. It feels like it's longer. It's like we've been waiting, and then bam, finally.
Well, let's talk about what happened last year when they cut rates in September.
Mm-hmm.
Cut rates in September and December.
Yeah.
Basically, when they cut rates last September, our mortgage rates actually went up.
I was going to say, we went up.
We went up about 0.5%. So when they started cutting the rates, our rates went up 0.5%. Is there any rhyme or reason to that? No. We don't price off of what the prime rate is doing unless it's a HELOC. Okay, that's the prime rate that we're talking about went from 7.5 to 7.25 now. So that's going to affect your HELOC. That's going to affect your credit cards. But is it going to affect it that much? Not a lot.
No.
Not a lot.
So the biggest question people have, Terry, is this one right here that we love, is what impact is this going to make into the real estate market for both, not just buyers, because we know buyers, it impacts them like more directly, but indirectly, which will become more directly for sellers, I do believe. One of the things I saw this week, Terry, was according to the chat and other sources, approximately 1 million buyers are now going to jump into the swimming pool, back into the real estate market, and be more interested in purchasing a home. Doesn't mean they're going to buy. It just means they are like, hey, we're moving in the right direction. Let me revamp those numbers. I got a pre-approval from Terry 6 months or a year ago. Let me see what it is today. What do I need to do? Is everything okay with my credit still? And all those things like that. So that's one of the biggest things. But let's do an example real quick for everybody, because this is where the rubber hits the road. 30-year fixed mortgage, Terry. Let's just use a $400,000 loan that somebody has. And if they had locked in at 6.5% just recently, before rates in the last week have been sliding down, and by the way, they went up a tiny bit like we predicted yesterday after the announcements and such, which is nothing to get really freaked out about, because the bottom line is they've been coming down. So if we just use this scenario, Terry, and I want you to share with everybody, $400,000 loan at 6.5% versus now closer to 6.25%, with, as we say, perfect buyer, perfect good stuff. You're all good. And your interest rate is really going to be that, which it's different for a little bit, everybody. And we're going to talk more about that. What is the difference in payment amounts and how much per month is a buyer going to save right now just with what happened?
So we're looking at, let's say 6.5% at $400,000. You're looking at a payment of, and this is principal and interest. Forget tax, forget insurance.
Exactly.
We can't lower those.
Yeah, those aren't coming down with an interest rate.
But the interest rate, you're looking at $2,528 a month. If we drop it 0.25%, just 0.25%, it's going to save you $65 a month.
Yes.
Okay. So let's talk about this. $65 a month. What does that actually mean for buying power?
Mm-hmm.
That means $10,000 more in a house.
Overnight.
Okay? Overnight. But it's not that big of a jump. You're saying up to 1 million borrowers are going to jump back into the market because the rates are coming down. Is it because it's giving more affordability? Well, $65 a month, $10,000 overall, that's not bad. But what it's actually done, Darren, is it's come down since it was at 7 1/8.
Yeah.
And now let's say we're at 6 3/8. What's the difference there?
Oh,
Okay.
yeah. That was what, a year and a half ago?
No,
A year ago? When were we above 7?
6 weeks ago.
Oh, okay.
Yeah.
No, wait, we weren't above 7, were we?
Yeah. Yep.
Oh my goodness, it came down a lot more than I thought.
Yeah, it's been coming down. So we were
Consistently.
hovering in the 7.
Mhm.
You know, we've been struggling keeping under 7, but we've been in that range. So let's say
I was thinking 8. Sorry, I was thinking 8% because I
Yeah.
know we hit 8 a year or whatever ago. Okay, yeah, we were hovering at 7 a lot, 6 3/4. But good.
But let's talk about why 1 million people are jumping back in the market. Psychologically,
Yep.
they're feeling good. You know, enthusiasm breeds enthusiasm. So what we're taking a look at is more people are feeling confident. Confidence is breeding confidence here. So let's talk about it. 7 1/8, just 6 weeks ago, 7 weeks ago, we're looking at 7 1/8, $400,000 loan, the same $400,000 loan. We're taking a look, and that payment would be $26.95. Okay. So that's at 7 1/8. Today, that same exact loan at 6 3/8 is $24.95. So $200 exactly a month.
Wow.
Is what you're saving. Now, that's where it makes a difference.
Yeah.
Quarter point's not going to make a big difference, but it's the trend that we're seeing that more and more people are saying, hey, rates are coming down. Hey, I'm feeling good. Hey, I want to jump back in the market. I want to get off this fence. Okay. So what we're taking a look at is $200 a month. Obviously, that's going to be, $2,400 a year. But what does that mean in buying power?
Yep.
Basically, $200 a month
Right.
is going to be
Here it comes.
$32,000
$32,000 house price difference.
price difference. Okay.
That's a big deal.
So that's a much bigger deal
Yep.
than what we were taking a look at. So it's anywhere from $32,000 to $35,000 more that you can get in the way of a house.
In the same amount. So that's like a buyer that, let's just say it's on the lower first end buyer, $275,000 is all they could qualify for, 7, 8 weeks ago, whatever. But now it's not 275. It's what, like 303, 305.
Mm-hmm.
That is a whole, that is a whole different amount of homes for sale that they would have never been able to afford, never seen, never been on their radar, but now it is. Now, do we recommend you go to the max and push it all up? Not necessarily. We want you to be comfortable, but it's the idea, like you said, Terry, of knowing the potential and the change and what's actually happening in a relatively short period of time.
Mm-hmm. Mm-hmm.
Like we've not seen interest rates and adjustments and these kind of things happen this much in quite a while. Now, and here's what people are going to say. Is that trend going to continue? Are we going to see in the next 7, 8 weeks rates go to if we continue on this trend, we would obviously be below 6%. We would be almost at 5 3/4 or less. Do I think rates in 7 or 8 weeks is going to be 5 3/4? I doubt that, but we'll see. But what are your thoughts?
My thoughts is that by the end of the year,
Mm-hmm.
we're going to be in the 6 1/8, 6% range.
Yep.
Okay?
When Santa Claus comes, 6%, right?
Yeah, that's what I think.
That's what I think
and
too.
If we can get under 6%,
Boom.
boom, psychologically,
Yep.
everybody's like, okay, we're in the 5s. We got a 5. The first number that we see is a 5. We're really back in the market, and I think things are going to heat up tremendously this coming spring.
Oh, yeah. There's no doubt this
So when you
spring's gonna
say,
be good.
hey, is this a good time to buy? Yeah, I believe it's a good time to buy. Well, the rates are coming down. Why would I get a rate today at 6 3/8 that I could get, maybe at 6 or 5.75 next January, February? And the reason is because there's going to be a lot more people in the market.
Competition's back.
Competition. So what
Yep.
happens is if you're selling a house next spring, I believe that we're going to see a rebound in appreciation. Okay.
Yeah, a little bit.
I think we're going to see a big rebound. I think we're going to see more and more people getting into the market. And I think we're going to see at a point where sellers are going to start saying, and this is where it's going to be big, Darren. Sellers are going to start saying, hey, I'm willing to give up my 3% now because I'm in a townhouse.
Yep.
I've got 2 kids and 1 on the way. I've got to move out. Now we're in the 5% range. I think I can do this. It's a lot more palatable than 7.5, 7 1/8. Okay.
Oh, night and day.
So there's a whole tier of people that were first time home buyers 3 and 4 years ago that their situation has changed 5 years ago, 6 years ago, that they bought a house and now they're saying, well, God, I'm married. I've got kids. I need to move up. I'll move out a little farther, whatever the case may be. But I think once we get under that 6%, we're going to see a whole different ball game when it comes to demand.
We'll see 2 million buyers come out.
But we're going to see a whole different ball game when it comes to supply because you're going to see all the people willing to put their house back on the market, give up that 3% so they can upgrade to what they need in today's market.
So what I typed in, see, that's awesome. And this funnels down to this next thought, Terry. What are the short-term effects and the medium-term effects? Here's what chat says about it. Obviously, mortgage lenders don't peg the rates exactly to the Fed funds rate, but they usually move in the same direction. Improved buyer affordability. That's what we've been talking about. Lower reduced monthly payments coming down, like we talked about, even that small drop, and a boost in buyer confidence. And you said it. That's what we're going to see a lot more of that we haven't seen in a little while, is a lot more people coming off the sidelines. Medium-term effects is an increased demand for housing. As borrowing gets cheaper, more buyers compete for available properties. This can push prices higher in the areas with a limited housing supply. Somebody may ask, do we have an area? Are we in a limited housing supply? Yes and no. Depends on the community. I was just in Kellerton this last week. These are all $900,000, $800,000 homes and up, right? Some are over $1 million. 14 homes for sale. Told the seller, don't panic. 9 of them are brand new builds. You only have 5 direct resale competition homes. Let's look what those are. Let's see how many have sold are under contract pending, which were 3, and how many have sold in the last, say, 3 to 4 months, or how many in the last month. But we want to go further out so the information is not as skewed, because I want to know how many of these resale homes are selling per month in here based on what was available, and then merge all that data together. So we had a fun little exercise in that, and we found out there's about a 4.5 to 5 month supply. Now, that's not really all that crazy, terrible, horrific. The next tier gets to be, where would you stack up against those other 5 homes, price-wise and condition? Are you on the bottom end with a better condition, or are you on the top end and your condition is not as good as some of the others? Gets very, very technical, and that's why I love what I do. So we did all that. So there's the examples that we have there. It says about the increased demand housing. Second big thing on medium-term effects is the refinancing wave. Current homeowners might refinance, freeing up cash or lowering payments. This can delay some of them, like listener homes for sale, or tighten some of the inventory. And then stronger market activity overall, more showings, multiple offers, quicker sales tend to lead to the rate drops, especially in competitive markets. But let's go back to the refinancing. That's you. How does this stuff affect now that we are starting to cross very pivotal points within the interest rate now that we didn't before? Because now you have a whole segment of buyers who bought when the interest rates were at almost 8% or 7.75%. What does this new news do for the first time and probably a long time for you as a lender, Terry?
So we have the last 3 years have been putting people in mortgages in the high 6 to up as high up as 8% range. Okay. So what we're seeing is, let's go back to what I just talked about, 7 1/8. That's a pretty good average rate over the last 3 years.
Okay. Yeah.
And if we're at 6 3/8 now, and our average loan amount is $400,000, I can save somebody, just like I said, $200 a month. If I save somebody $200 a month, the question that I always want to present to them that they should be asking me is, let's talk about what, because somebody might say, well, I want to wait until rates come down even farther.
Okay.
And we don't know if that's going to happen, but I'd say in the next 3 months, we're going to be okay. But let's talk about this. $200 a month savings on your mortgage. What does that actually mean?
Mm-hmm.
That means that you're saving $2,400 a year. That's a pretty big number when you're looking to refinance.
Yeah, it is.
But more importantly, the question is, that's great. I'm saving $200 a month, but what's it going to cost me?
Yeah. What does it cost to refinance?
What's the cost to refinance? Let's talk about just the refinance costs.
Okay.
We're not talking about escrows and recreating an escrow account.
Because you got to have those whether you keep it or do it again. Doesn't matter.
Correct.
Okay.
So the costs, the appraisal, the title company, the title insurance, the, whatever the costs are involved, the actual closing costs are probably going to run in about the $3,500 a month, $3,500 total range.
Yeah.
So if you're saving $200 a month, you're looking at basically 17 to 18 months to break even on your refinance. So the first question I always ask is, I say, okay, your break even is going to be about 17 months. Do you see yourself in this house in 17 months?
That's it. Yep.
And if they say, yes, this is a house I'm going to be here for the next 3 years, next 4 years, next 5 years, yes, this is the house. Then I say, then let's move forward with a refinance.
Yep.
If they say, well, I'm going to be here maybe a year, we're going to downsize, whatever the case may be, then let's not refinance.
Yeah, you're not. Yeah, it's not going to be worth it.
The only thing that's going to hurt you is you're still going to have 7 1/8%. You're not going to be able to brag at the next cocktail party that you refinanced to 6 3/8.
Right.
But you're going to save yourself money actually in the long run.
Yeah.
If you don't refinance. So a lot of times people will get bombarded. They'll get inundated with calls about refinancing, calls. What people don't on the other end of the line, what they don't talk about is they don't talk about how much it's going to cost and what your break even is.
That's it.
And that's what I address on every refinance is I make sure that it's a decision, a smart business decision for you.
Yep.
And that it's going to make sense for you. But all these calls, all these letters, everything that you're going to get inundating you with refinance. And Terry says he can get 6 3/8, but I can get 5.875. Hey, that's great. What's it going to cost you? Well, I don't know.
$10,000.
Absolutely. What's it going to cost you? Now your break-even point is stretched out to like
5 years,
5-6 years. Yeah. And you say, well, that doesn't make sense to refinance at the lower rate. So please
pay attention.
Don't pull that refinance trigger until you know exactly what you're getting into.
Yeah.
The internet lenders, they'll call, they'll inundate.
Bait and switch. That's the old, I got the lowest rate, but they don't tell you all the rest of the details, right?
It may not be the lowest payment because you're going to have to finance
That's right.
equity. So all that money, they say, hey, no money out of your pocket.
That's the key. Say that again. Financing your own equity, what makes it feel and seem like it's not so dang bad. Talk about that. That's a big thing.
So I can give you under 6%.
Yeah.
That's not a problem.
Right.
But on a refinance, I don't want to have you pay a lot of points or a lot of closing costs.
Right.
Because then your break-even point rises.
Yep.
Right?
Yep.
So if I get you a lower rate but it costs you an extra, $8,000 to get the lower rate, that's taking money out of your equity.
Exactly.
So just getting back to where you started is going to take you years.
Yes.
So it doesn't really make sense to jump into these, and people get so fixated on, well, I got 5.875 and, no points. Well, yeah, there's going to be something. There's going to be some closing costs there that may not be called points to the lender, and they may not reflect it to you. But basically, it's going to cost you a lot more than you should be paying, and you're going to finance it. Yeah, I'm going to have a lower payment. That's great. I'm also going to have no money out of my pocket. Great.
Mm-hmm.
I'm also going to skip 1 month's payment. Great. Where do you think all that money comes from?
Yeah, you think it's free?
It comes from the equity in your home.
Exactly.
So you're depleting the equity in
Mhm.
your home.
Yep.
So you always got to ask, how long are we going to be in this mortgage? And that's going to determine whether you should refinance or not, more than how much you're going to save each month.
Exactly.
Is that
Perfect. Couldn't have done it better.
Okay.
And this is a perfect segment for that. So make sure, the bottom line is this, make sure you call Terry, end of the program. You got the information for both of us. Call Terry up, set up a meeting. He will go over for free, right, Terry? All of your scenarios and look at everything from every angle. And then you can decide from there. And there you go. So good.
Yeah. 100%.
All right, 2 minutes left. Direct benefit for sellers with the rates coming down. What is it? The larger pool of buyers. Here they come, boys and girls. Lower borrowing costs and more buyers are back into the market. This increases showings, competition, and the chance of multiple offers. Did I just see this correctly, Terry? Multiple offers. Holy cow, you can get that if you just be a little aggressive in any market, but we have the potential coming up more. Stronger home values. Oh my goodness. Sellers are going to think, Terry, my house value is going to go up 10% a year again because of this. No, it's not. Let me sit down with you, give you a custom plan, and I'm going to keep yourself in a little bit of the reality check of where things are, which are good. Okay, and then faster sales, no doubt about it. More motivated buyers. Homes can often sell a little quicker, and days on market usually starts to shrink. We're going to keep our eye on that. We got 30 seconds in the program. Let's prep everybody, Terry, for the next one. You ready? And you got it on your stuff. We're going to call this the perfect mortgage borrower. Who is the perfect mortgage borrower out there? Do you want to be perfect? We're going to see how good you've kept your life. Then we've got the average. Doesn't mean you're a bad person. Average mortgage borrower. And then we've got the high risk, and they say on here, poor mortgage borrower. What the key is, this is what people want to know. What are the criteria? What are the numbers? How do I know which box I fit into? And just to get this and finalize this with 45 seconds, Terry, we're going to cover this top to bottom, and I'm going to let you use your expertise about the fact that when people see an interest rate out in the public, that number is for who?
The perfect borrower.
The perfect borrower. You want to know how you're the perfect, average, or maybe high-risk borrower? Tune in next week. Terry and I are going to share it with the most details because at the end of the day, there are a ton of factors that determine at the bottom of the funnel what is your interest rate. All right. So thank you guys so much for tuning in to your Frederick Real Estate Update with Terry and I each and every week. We will see you guys. Happy buying and selling, and have fun out there at the Great Frederick Fair because I'll be there with Mr. Tim May doing a big old update on the market stuff. So take care. Happy buying and selling.